The daily ranges are shrinking. 5 sessions, $2,878, then $2,821, then $2,615, then $2,587, then $1,655. Each session is tighter than the last, and Bitcoin has not closed above the weekly midpoint at $67,857 for 4 consecutive days. That is not drift, that is compression. The weekly range runs from $65,621 to $70,092, a span of just $4,471. Price is trading in the lower half of that range right now. Structure is tightening around a decision that the market has not yet been willing to make. This is Price Action Traders, Crypto, the daily Bitcoin market structure briefing. No noise, no hype. If you want a clear market read, subscribe and turn on notifications. Stepping back to the yearly chart and the context sharpens quickly. The 2026 yearly candle opened at $87,626, traded up to $97,900, and has since pulled back to a current close of $67,246. The yearly midpoint sits at $78,950. Price is not close to it, not from above. Bitcoin is printing the 2026 candle significantly below the annual midpoint, and the structure of this year so far is bearish. The high was set in January. The current close is nearly $11,700 below where the year opened. Looking at the month chart, February's monthly candle reinforces that picture. The month opened at $78,744, peaked at $79,344, and has since ground down to a low of $60,000. The current close at $67,246 places February below its monthly midpoint of $69,672. Sellers have controlled February from near the open. January closed below its midpoint at $86,789. December closed below its midpoint at $91,381. 3 consecutive months of bearish midpoint closes. The higher time frame structure is under sustained pressure, and that is the backdrop for everything that is happening on the weekly and daily right now. The weekly chart tells the story of a market that had a dramatic reset and has since been trying, and so far failing, to reclaim lost ground. 6 weeks ago, the week commencing 26th January saw price open at $86,610, peak at $90,493, and close at $77,004, a $14,815 range, closing well below the weekly midpoint at $83,086. That candle announced the shift. The following week, commencing 2 February, was the structural break, a $19,284 weekly range that swept down to the $60,000 level before recovering to close at $70,302, a wide-ranging, volatile week that found buyers at the lows but could not reclaim the prior range. The week of 9 February compressed to a $6,258 range, closing at $68,888, above its midpoint, a tentative hold. The current week, commencing 16 February, has compressed further still, a $4,471 range with a current close at $67,246, now sitting below the weekly midpoint at $67,857. 3 weeks of progressively tighter structure, each week printing a lower high than the last. The ceiling is not moving up. Now into the last 14 days where the compression story comes into full resolution. The sequence opens on Friday, 6th February, and this is the session the entire 14-day window is built around. Price opened at $62,856, traded down to a low of $60,000, the round number, the monthly low, the structural floor, and then reversed sharply, closing at $70,528, a range of $11,708. The close sat above the daily midpoint at $65,854. Buyers absorbed that low and delivered a full-range reversal inside one session. Everything that follows is a reaction to that candle. Saturday and Sunday continued the momentum in narrower terms. Saturday, 7th February opened at $70,544, reached $71,652, and closed at $69,310, a $4,316 range, closed below the daily midpoint. Sunday, 8th February opened at $69,287, briefly pushed to $72,243, the highest point of the 14-day window, and settled at $70,302. Range, $3,388. Closed just below the daily midpoint at $70,549. The upper boundary of this sequence was being established. 2 days of fading after the Friday recovery, but price holding above $68,000. Then comes Monday, 9th February, and this is where the ceiling starts to define itself. Price opened at $70,350, reached $71,384, and closed at $70,083, a range of $3,111. Close above midpoint, buyers marginal control. But look at that high, $71,384. The prior two sessions posted highs of $71,652 and $72,243. Monday's high was lower. The ceiling was already beginning to drop. Tuesday, 10th February confirmed the pressure. Opened at $70,163, high of only $70,468, the narrowest high of the week so far, low of $67,901, and close at $68,783. Range, $2,567. Close below the daily midpoint at $69,184. Sellers in control. The range contracted sharply after the volatility of the prior week. Wednesday, 11th February pressed further. Opened $68,790, high $69,240, low $65,767, and close $67,048. Range $3,473. Sellers extended. This is the session where the weekly low at $65,127 first came into view. The range reached down and the close sat below the daily midpoint at $67,503. Thursday, 12th February ground lower still. Opened $67,023, high $68,341, low $65,127, and close $66,238. 4 consecutive sessions of seller control following the Sunday peak. The structure had shifted from recovery to compression under pressure. The 6 sessions from Friday, 6th February to Thursday, 12th February tell a complete structural story. A violent reversal off $60,000, a recovery to $72,233, and then 4 consecutive days of lower highs and seller control. The peak was $72,233 on Sunday. 6 days later, the market was closing at $66,238. The recovery ran out of conviction before it ran out of time. Friday, 13th February breaks the sequence, and this is the first micro pivot. Price opened at $66,189, pushed to $69,394, and closed at $68,811, a range of $3,543. Close above the daily midpoint at $67,622. A recovery session, 1 day of buyer control inserted into the sell-off. Saturday, 14th February continued the hold. Opened at the prior close at $68,811, high $70,694, low $68,708, and close $69,740. Range $1,986, notably tight. Close above midpoint at $69,701. The compression was beginning. Sunday, 15th February gave back slightly. Opened $69,765, high $70,922, low $68,044, and close $68,788. Range $2,878.
Notice that high, $70,922. The session reached above $70,000 and could not hold it. The pattern of lower highs in the upper range is consistent. Monday, 16th February, opened $68,787, high $70,902, low $67,271, and close $68,878, range $2,821. Close above midpoint, buyers marginal control for the day. But again, the high, $70,902. The $70,000 level is a ceiling that is drawing repeated tests and repeated rejections without follow-through. Tuesday, 17th February, opened $68,832, high $69,219, low $66,605, and close $67,747, range $2,615.
The $70,000 level is a ceiling that is drawing repeated tests and repeated rejections without follow-through. Tuesday, 17 February. Opened $68,832, high $69,219, low $66,605, close $67,479, range $2,615, close below midpoint, lower high than Monday. Wednesday, 18 February, opened $67,501, high $68,436, low $65,849, close $66,439, range $2,587, close below midpoint, lower high again. The high of Wednesday was below the low of Monday. This is structure compressing with seller bias. And that brings us to today, Thursday, 19 February, and the most compressed session of the entire 14-day window. Price opened at $66,406, reached a high of $67,276, posted a low of $65,621, and at the time of this briefing is closing near $66,951. Range $1,655. The daily midpoint sits at $66,449. The close is marginally above it. Buyers hold the session by a slim margin. But $1,655 is the tightest range in this entire 14-day sequence. The market is holding its breath. 5 sessions, 5 shrinking ranges, $2,878 to $2,821 to $2,615 to $2,587 to $1,655. The daily ranges are compressing inside a weekly range of just $4,471. This is not indecision. This is the market waiting for permission to move. The direction of the release from this compression will be the most important structural read of the next 2 weeks. Step away from the chart for a moment and look at what the macro picture is holding underneath this compression. The Federal Reserve remains in its current holding pattern. The January FOMC meeting produced no change in rates, and the messaging remained data-dependent, which is institutional language for "we are watching inflation and we are watching the labor market, and we are not in a rush." For Bitcoin, a Fed that is on hold rather than cutting removes one of the key bullish tailwinds that drove the 2024 rally, the expectation of cheap money returning. The bull counterpoint is that rates at current levels have not broken the market. Bitcoin held $60,000 and recovered from there, which suggests the demand base is structural, not solely rate-driven. The U.S. dollar index, DXY, has been the most direct macro correlation for Bitcoin over the last 3 months. A stronger dollar has consistently coincided with Bitcoin weakness and a weaker dollar with Bitcoin strength. DXY has been consolidating near recent highs, and that consolidation is mirrored almost precisely in what Bitcoin is doing right now: range-bound, compressed, waiting. If DXY breaks lower from its range, Bitcoin's relief rally has macro support. If DXY holds or breaks higher, the compression in Bitcoin is more likely to resolve downward. Bitcoin spot ETF flows have been the structural bid that distinguished this cycle from prior ones. Institutional accumulation through regulated vehicles provides a consistent buyer at lower prices, which explains why $60,000 held on the 6th February flush. The flows data remains net positive on a rolling 30-day basis. The bear counterpoint is that if ETF inflows slow materially, that structural bid weakens and the price floor may not hold as firmly as it did earlier this month. The structure says compression beneath a falling ceiling, 5 sessions of shrinking ranges below $70,000, bearish midpoint control on the weekly. The macro says Fed on hold, dollar consolidating, ETF bid present but not accelerating. Structure and macro are not in conflict. Both are neutral to cautiously bearish until a clear resolution prints. The close tonight is the most important data point of the week. 2 levels control the short-term structural read. Here they are plainly. Bull case, a daily close above $70,092, the current week's high, breaks the sequence of lower highs that have defined this compression and reopens the path towards $72,243, the high of 8th February, and the resistance that has capped every recovery attempt in this 14-day window. Bear case, a daily close below $65,621, the current week's low, puts $65,127 back in play immediately. That level is the prior week's low. A break of both weekly lows in sequence opens the path towards a retest of $60,000, the structural floor that has defined February's range. The line in the sand, $67,857, the midpoint of the current weekly range. Every session this week has been determined whether the close landed above or below this single level. Tuesday closed below it. Wednesday closed below it. Today is sitting marginally above it. A sustained daily close above $67,857 shifts the short-term bias back to neutral. A close back below it confirms sellers hold the week. $70,092 above breaks the compression ceiling, opens path to $72,243. $65,621 below puts $65,127 and then $60,000 back in play. $67,857, the weekly midpoint, the one level that decides who controls this week. This has been an analysis on Bitcoin USD as at 20 February 2026. You now have the complete picture. 5 sessions of compressing daily ranges inside a tight weekly structure, with the macro environment providing no clear directional catalyst. The close tonight will either confirm the compression is continuing to coil or deliver the structural verdict the market has been building towards. If today's briefing gave you clarity, hit the like button, leave a comment with the level you are watching, and subscribe to Price Action Traders Crypto for the daily structure read every evening at 8 p.m. Every view and every subscriber is what keeps this desk running. Share it with one person who trades Bitcoin. It costs nothing and helps more than you think. Trade what you see, not what you think. Good trading.